Hello everyone and welcome back to another video. In today's video, I would like to talk about 3 stocks that are providing me with long-term value investing opportunities. And before we get started, let me clarify that I am not a financial advisor and this is all just my own opinion. This is not a recommendation to go and buy, as I have no idea what your risk tolerances are. And with that disclaimer out of the way, let's hop right into the video. Alright, so the very first stock that I want to talk about is Sumitomo Chemical India Limited. Sumitomo Chemical Limited manufactures, imports, and market products for crop protection, environmental health, professional pest control, and feed additives for use in India. SCIL has also marked its presence in Africa, Europe, and Australia. SCIL is trading at a share price of 400 rupees, and it is a mid-cap company with a market cap of 20,158 crore. Stock is providing a dividend yield of 0.2%. Its return on equity is 24.8%. and its return on capital employed is 32.3%, and both these numbers are considered very good. Company's debt to equity ratio is 0.02 and it has a debt of 32.6 crore, so the company looks almost debt-free company, and it has a very healthy free cash flow of 382 crore. So all this looks pretty attractive to me, but now let's have a look at some of the other key things as well. So as we can see, the current price is more than the intrinsic value, but all good things are not cheap and all cheap things are not good. So in my opinion, the stock is worth buying at this price. Currently, the stock is not in the overbought zone as well, so it is a good time to consider it. And it has been generating a better return on equity than bank FD, and not a lot of promoters holding is pledged, so I strongly believe it will be a good time to invest in this company. The company has a low probability of default in the next 12 months. The company is among the top performers in quality checks and growth rate as well. And now let us quickly have a look at the financials of the company. So as we can see here that the total revenue generated in 2018 was 1943 crore, then in 2019 it was 2235 crore, then in 2020 it was 2435 crore, and in the fiscal year 2021 it is sitting right at 2663 crore. So revenue has grown at a yearly rate of 27.48% versus industry average of 9.88% over the last 5 years, which is amazing in my opinion. And the company has delivered a good profit growth of 39.82% CAGR over the last 5 years. So again, this right here suggests to me that the company is providing with a great long-term investment opportunity with its growing revenue and profits every year, and they have maintained good cash flow over the past few years as well. So yes, the company is looking very attractive to invest at this price now. But alright, now let's move on to the second stock, and this one is Sri Digvijay Cement Company Limited. Sri Digvijay Cement Company Limited, incorporated in 1944, engaged in manufacturing and selling of ordinary and special Portland cement. The stock is currently trading at a price of 82.35 rupees, and it is a small cap company with a market cap of 1194 crore. The stock is providing a very healthy dividend yield of 3%, and its return on equity is 18.5%, and its return on capital employed is 28.9%, which is very good. And the company also have a free cash flow of 65 crore. And if you look at the company's debt, it's almost a debt-free company, and its debt to equity ratio is 0%, which I love about this company. The company is expected to give good quarter, and if you look at its company's CAGR over the last 5 years, it has provided a very good profit growth of 48.16% CAGR, which is a very good sign for long-term investors. So now let's have a look at some of the other key things as well. So as we can see, the current price is less than the intrinsic value, and the stock is not in the overbought zone. So it is a good time to consider the stock. The stock has been generating a better return on equity than bank FD, and not a lot of promoters holding is pledged, and the company has a low probability of default in the next 12 months. So I strongly believe it will be a good time to invest in this company given its very strong fundamentals. And now let us quickly have a look at the financials of this company. So the total revenue generated in the fiscal year 2018 was 419 crore. Then in 2019 it was 441 crore. Then in 2020 it was 472 crore. And in the fiscal year 2021 it is 509 crore. So the revenue growth has been quite stable for this company, and I strongly believe it will continue to grow in the future. And as I mentioned earlier about the profit growth of 48.16% CAGR over the last 5 years, as we can see here that their net income has grown from 13.36 crore in 2018 to more than 4 times in 2021, which is 53.97 CR. So again, this is the type of growth for any company that I love to see personally, as it is providing with great long-term investment opportunity with its growing revenue and most importantly profits every year, and reducing its borrowings, and they have also maintained good cash flow over the past few years. And now let's move on to the third and the final stock, and this one is Oriental Aromatics Limited. Oriental Aromatics is engaged in the business of manufacturing fine chemicals like camphor, perfumery and special aroma chemicals, fragrances and flavors. The company is one of only 10 completely integrated flavor, fragrance and aroma chemical manufacturing companies in the world. Oriental Aromatics is trading at a share price of 863.50 rupees, and it is a small cap company with a market cap of 2,953 CR. Stock is providing a dividend yield of 0.28%. Its return on equity is 20.2% and its return on capital employed is 24.4%. Company's debt to equity ratio is 0.14 and it has a debt of 77.9 CR. And its annual net profit is 114 CR, so the company is almost a debt-free company, and it has a negative free cash flow of 9 CR. And now let's have a look at some of the other key things as well. So their current price is more than the intrinsic value. The stock is not in the overbought zone, and the company has a low probability of default in the next 12 months. And the company is among the top performers in quality and growth scores as well, and not a lot of promoters holding his place, so I strongly believe it will be a good time to invest in this company as well. And now let's quickly have a look at the financials of this company. So as we can see here that the total revenue generated in 2018 was 506 CR, then in 2019 755 CR, then in 2020 it was 769 CR, and in the fiscal year 2021 it is 714 CR. So the revenue has grown at a yearly rate of 15.06% over the last 5 years, which is pretty decent growth for any company compared to its industry average of only 3.49%. And their net income has also grown at a yearly rate of 35.05% over the last 5 years versus an industry average of 10.86%, which is again looks very attractive to me. And this right here suggests to me that the company is providing with a great long-term investment opportunity with its growing revenue and profits every year. Alright, so that's going to wrap up the video everyone, and if you enjoyed this video, then please remember to leave a like on it. It really helps up my channel and I really appreciate it. Thank you all so much for watching, and I hope to see you all again in my next video. Have a good day.